Well, hey there, it's Terry Sawchuk. It's Thursday, so that means it's time for 3-Minute Thursdays. I want to start this week's edition by talking about oil. It's quietly crept back up. It's now at $80.92 a barrel. Anytime oil gets, at or above $80, it tends to have a bit of a cooling off effect on the economy, and naturally that's just because gas goes into, oil and gas go into everything. So it's going to be a bit of a drag if it stays this high. The other thing that's been happening, and it's kind of been quiet, is the U.S. dollar has quietly been creeping back up. It's now back to 105.61 compared to a basket of other currencies, which that's creeping back up there. And if you look at the U.S. dollar versus the Japanese yen, again, it's creeping up to that 158.76. So we're getting back up to near 160, but you can see that we wicked way up to 160 back in April, and then the interventions came in and it drove the price back down. But now look, we're right back to where we were, actually higher now. And this is putting the strong dollar is putting some very difficult circumstances on foreign currencies. And overnight, a Japanese bank said that they're going to have to take some losses and change their strategy. And they talked about the losses and the carry trade, and basically any trade, they're going to have to sell U.S. treasuries in order to create the liquidity to offset some of the losses. And it's just getting much more expensive for Japan to convert yen into dollars and then take those dollars and buy other things. And so that is creating some stress in the global banking system. So the dollar, the U.S. dollar, the DXY at 105.61, and the yen, the dollar against the yen really strengthening here, could create some potentially serious headwinds. And as we get into the second half of this year, if this trend continues and the dollar continues to strengthen, the banking system is potentially going to have some challenges. And so that might not be great for stocks. Now, the NASDAQ has been roaring along. It's at 19,909, and you can see that it's been basically shooting straight up. And this is all on the back of NVIDIA and the SMCI, which is Supermicro Computers. And these are all companies that have hardware that go into the GPUs for AI, which is artificial intelligence, as you know. So these are some big picture things that are going on right now that I think they're giving us clues that the market may be kind of due for a pause here, may be getting ahead of itself. As you can see, the relative strength index on the NASDAQ is super high. It's at the highest it's been in a long time. So all that being said, I think we're certainly still bullish for now. But we can start to see that things are beginning to crack a little bit, and this trend, while it could continue, I'm not sure how much longer it's going to continue. So we are going to stay invested the way we are, but we're also watching things very closely. And if we need to make some adjustments to kind of bring the risk down a little bit, we certainly can and will do that. But for now, even though we're starting to see signs of cracking, we're not to the place yet where this is an inevitable downturn. So we're just going to have to be patient a little bit and keep reading the tea leaves. But we are starting to see some things that are a bit concerning. So that's going to wrap up this week's edition of 3-Minute. Well, actually, it's probably close to 4-Minute Thursday. So I appreciate your patience, and we look forward to seeing you next week.